onto this chart, we can clearly see that we are in an uptrend, with this one here being our trading range or our current trading range. So how do we get to know the current trading range? Of course, by marking the market structure. So let's mark the market structure pretty fast. You can clearly see right here, price has, okay, so price has taken out that inducement and reversed back, breaking past the swing point, and this creates a break of structure, a bearish break of structure. Then I was anticipating that price will mitigate something here and make a reverse to breaking here so that it can continue with its prevailing trend, but the opposite happened and price came for this high, and of course we know a break past that will cause a change of character or a bullish break of structure. And this change of character was our early sign for the shift in market structure from being downtrend to uptrend. Okay, so now how do we get to the current trading range? You can clearly see price has taken out the inducement exactly right there and reversed back while protecting this low, this low. So after price has taken out the inducement, probably swept something here, the engineering liquidity exactly right here. We can clearly see that price swept the engineering liquidity exactly right there and reversed back, breaking past this swing point. And we know once that happened, then that one is a valid break of structure to the upside. So then this confirms that we are in a new trading range that ranges from this low, this low all the way to this high. So if I am to draw that fib, then that's the trading range, and that would be our high. So exactly right here now, of course this one here will be our trading range high, and this one here is our minor inducement, so our major inducement. So price came for the major inducement already taken out, and this one here is, or the extreme, the extreme order block will be somewhere here. With this time frame, I can see it's internal, so to get the exact one or the precise one, I will need to shift the 1 hour or to the lower time frame, like the 1 hour, and I can get to see that this one here is our extreme order block. So exactly right there, that's our hidden extreme order block. So extreme bullish order block, exactly right there. That's it, and you can clearly see that price has mitigated it pretty much there. So let's shift to the 4 hour. So exactly right here, you can see it clearly on the H4 that price has mitigated it. That is the extreme order block. And this is now when we get to shift to the M15 or the lower time frame, so that we can get the lower time frame, confirmation. If you want to take the trade based on the same time frame, you will need to take a direct entry based on the reversal pattern. But since we know about the top-down analysis entries, since we know about the lower time frame confirmation, then let's get to the M15. Okay, and we know that the lower time frame confirmation gives a good RR, so why not do it? Okay, so exactly right here, we can clearly see on the M15 that this one here is the, I am marking the structure on the M15, so you can clearly see price has taken out the inducement, made a break of structure, a bearish break of structure that is. So exactly right there, that's the, a bearish break of structure. And we can clearly see on this range or this trading range that ranges from this high, from that high all the way to this low. We can clearly see that this one here was our major inducement, and price, you can clearly see price has taken that out. So exactly right there, that's our major inducement. And if you have watched my top-down analysis videos or my breakdowns, you know for sure that once price has mitigated the higher time frame POI, then once price has mitigated the higher time frame POI, then this inducement on the internal structure or on the lower time frame changes its role from being an inducement to being a break of structure. So this means that this one here is now the change of character or the bullish break of structure. And so this means that this one here is no longer a valid one. This extreme this extreme order block is no longer valid. So this extreme bearish order block, so if price makes it out to here, I'm not anticipating that price will reverse back here all the way towards breaking this low, because we have shifted bias from being bearish to now being bullish. Okay, so let me zoom here so that I get to see what's happening here. Okay, so you can clearly see, by the way, I said a break by a candle, I mean a break by a wick is a valid one. So this here was the change of character, then price came for the minor inducement exactly right here and mitigated this extreme. So you can see that there, that's the extreme. So price mitigated this extreme, of which of course it is the extreme bullish. So this means that we are in a new trading range, with this one here being the low, this one here being the high. So exactly right there. So this here is the break of structure. So I can just do that, and we are in a new trading range. And where is the inducement? So of course this one is our major inducement. At the moment, that's the major inducement, and this one here is the extreme. So you can clearly see that this one here is the extreme. Right, so that's the extreme bullish of B. So that's the extreme bullish of B. This one here is the major inducement. Why major? Because it happened after the break of structure. Okay, so let's see where price will be reversing from. Of course, I'm anticipating it will be reversing from the extreme of B. So let's see. Okay, so price mitigated exactly the extreme of B right there, and it's giving this reaction. This one here is our major inducement. We know that the inducement is the recently formed valid pullback. So this means it will shift from this to this one here, and this one here now will be the engineering liquidity. This one here, it will be now the major inducement. So let's mark them: major inducement, and this one here engineering liquidity. All right, so let's see if price will make it to. All right, so price has taken out the major inducement, so this confirms this one here as a swing point high. So if price comes all the way breaking past this, then that will be a valid bullish break of structure. So right now I'll be placing my buy limit order exactly right here, and of course stop loss, it will be at this low, and I'll be targeting this high. Of course, that will be the, since I'm a day trader, I want the trade to be like, I don't want to hold trades for overnight or over the weekend. So this means that I will just be targeting this internal structure high, so that my trades end up closing on the same day. But if I wanted to hold even like, if let's say I'm a swing trader and I want to hold this trade for long, then this means I will target this high, of which it is the H4 external liquidity, and this will give me an insane risk reward that is a 22, of which that's a very high risk reward. But anyway, okay, so I want to, since I'm a day trader, I will not be targeting all that. I just need this one here. So yeah, this here will be my target. So exactly right there, that's my target. And yeah, set my buy limit order exactly right there. And right now, let's see what price does. And exactly right here, price mitigated. So you can see exactly right there, price made it out to, you can see the extreme of B exactly right there. Price has yet taken out our SL. The low is still protected, and of course this is our high. So if price makes it out to this high, then that's a valid break of structure. Okay, so let me continue running price. You can see that price is heading into our favor. Okay, so let me make it fast. Okay, so price is consolidating in between, but eventually I'm anticipating that price will make it out to our full TP. Exactly right there, you can clearly see that price made it out to the full TP. Even though it was very slow, price made it out here, and this is what we call now the break of structure. So exactly right here, that's the break of structure. Yep, and we have a new trading range, of which ranges from this low, yep, I mean this low, all the way to that high. Okay, so this one here is our minor inducement, and Checking at this time frame, of course, this one here is our minor inducement at the moment. That's the minor inducement, and this one here is our major inducement. Okay, so that's our major inducement, and checking at this time frame, I don't see any valid POI, so I'll be shifting to the M5. So right here on the M5, if I am to start exactly here, I can clearly see that this here was mitigated. So let me use this. Right, so you can see that that was mitigated, and to the next, it was also mitigated. Okay, so to this one here also, you can see it's mitigated. Okay, so the one that is left unmitigated is this one here, because we can clearly see that this one here too, it's mitigated. This one, it is also mitigated. So the one that is left unmitigated is this one, and that's our extreme order block. So I'll be using this, extreme bullish OB. So let's get back to the M15. So we have our extreme order block exactly right here, our minor inducement and our major inducement exactly right here. So in this case, okay, let me continue running price. Price can create another valid pullback up there. All right, so now here the opposite happened. You can clearly see that instead of price actually creating another valid pullback to make that major inducement, price ended up taking the minor inducement. So this means that this one here is all right. Everything will now be fine. The minor inducement, major inducement. If you were to set the buy limit order, the safer sell, of course, it will be some few pips below this low, but that will give you a small risk to reward. You can clearly see that that is less than 1:2. So in this case, then it is worth it for you to wait for price to create this. You can clearly see this pattern. All right, so the pattern that I'm talking about here is the major, the morning star. You can clearly see this pattern here is what we call the morning star pattern. Yeah, this one here is the morning star pattern. So a very strong reversal. So upon mitigation of the extreme OB, exactly right there, price created this morning star pattern. So if I am to enter after the closure of this morning star pattern, this will give me a risk to reward. Yeah, this will give me a 1:2. So this is worth it. Of course, yeah, I need a 1:2. So exactly right there, that's worth it. So let's see what price does. But this is not the safest sell. The safest sell is below here. But if we did that, it will give us a small risk to reward, and we need a risk to reward that is at least the minimum 1:2, because that's the reasonable one. Okay, and eventually price made it out to the final TP very fast right there, and this means that we're in a new trading range, and so that's a valid break of structure. So exactly right there, that's a valid break of structure. This one here will make the trading range low. So exactly right there, that will be the trading range low. And yeah, let's see if price creates some okay, so price is heading okay. So I can see that this one here is the inducement. So exactly right there, you can see that that's the major inducement, because that was the recently formed valid pullback that price came forward for. That's the major inducement. Major because it occurred after the break of structure. That's our that's our external high. And yeah, let's mark the POIs. I can see this one here is the right, so that's our decisional exactly right there. So let me okay, so this is not a bearish one, it's a bullish one. So it's a decisional bullish OB, needs to be blue. Okay, so that's the decisional bullish OB. Why that's the decisional? It is because it is the one that caused the break of structure. You can clearly see a break of this internal high as well as the break of this external high. So that's what we call the decisional. And of course the extreme, it will be this one here. So this one here makes the extreme OB, and I'll be using this, of course, extreme bullish OB exactly right there. And the engineering liquidity, of course, is none other than this one here. So that's our engineering liquidity. So in this case, okay, so that's our engineering liquidity. Okay, since we are targeting the internal highs, these ones here. If I place a buy limit order at this decisional B, of which it is, if you want to not miss this trade, of course you'll need to place it on the decisional B, but this will give you an unreasonable risk reward. You can clearly see that, of course, our target is there. You can clearly see that this will give us a 1:1. For me, a 1:1 is unreasonable, so I will place my buy limit order on the engineering liquidity. This will give me a 2.8, and that is reasonable to me. Okay, so let me run price. If price triggers my buy limit order, well and good. If it doesn't, but you can clearly see price did that. You can see upon mitigation of the decisional, price gave a reaction, but then later failed it, came for the engineering liquidity exactly right there. A very nice sweep exactly right there, and price is now heading towards the internal high. So exactly right there, you can see, yeah, price is doing all of that, but I'm anticipating a break. And okay, price is still consolidating in between, but eventually we can clearly see that price made it out the high exactly right there. So this means that we're in a new trading range, with this one here being the boss. I mean the break of structure, a bullish break of structure. We are in a new trading range, guys, with this one here being the low. So this one here is the trading range low. By the way, you need to check the higher time frame external high. Where is the higher time frame external high? So the higher time frame external high, exactly this one here. So we need to make sure that we have not made it, I mean, we are not past this line or this external high. And you can clearly see that, yeah, we are not past it. And the process of buying will continue until price makes it out to the H4 external liquidity. So anyway, since it's too far, let's continue buying. And on this trading range, I can clearly see that price has taken out the minor inducement exactly right here, and this confirms a swing point or an external high exactly right here. And yeah, I can clearly see price has already mitigated the extreme order block exactly right there. This will be clearly seen on the M5. So this is the extreme bullish OB. Remember, since the trading range involves a minor inducement, then the external liquidity will be the major inducement. If I get to the M5, I can clearly see that everything here was mitigated. So let's do what we always do. Here you can see that this one here mitigated. So let me use this here so that we can clearly see, right. So you can see that's mitigated. This one here mitigated. All right, so another one, yeah, this one mitigated. You can clearly see that. I can clearly see this one here also mitigated. So the one that is left unmitigated is this one here. Yeah, this one. So exactly that one there. So that's our extreme order block. So I need to refine it exactly right here. So that's our extreme order block, well refined on the M5. And yeah, let's get back to the M15 now. And you can clearly see that price has mitigated the M5 exactly right there. So the M5 extreme OB, and price is giving that reaction. That reaction is very big. Anyway, if I am to enter, probably I'll enter based on that stop loss, of course, there. And if I am to target here, this will give me a small risk reward. Of course, this is not even the safer, because you can see this is the major inducement. Price can decide to fail this extreme OB. Anyway, let me try to take the entry based off this, the 50% of this. All right, so I'll be entering based on the 50% of this one here. So let's see if price will make it here. So let's see, because this, okay, so price went aggressively up there, you can see that. And yeah, so this here was untriggered, not unless I took the trade after this. Yeah, you can see there. So this will give me a 1:1.2, not unless I extend it for the 1.2. Yeah, that will be it. But you know, extending past this external liquidity, it's very very risky. Anyways, you can see if I am to extend, then that will give me that will get my entry triggered, of course. So this one here is our new trading range low, and price is heading towards this high. So this one is not a valid pullback. So let me continue running price. Of course, this, yeah. Right, so where is our high? You can clearly see that our H4 high is this one here. So let me continue running price and see what price does. Right, so price is aggressively going up and up. Okay, you can clearly see that this one here is the major inducement. You can clearly see that this one is the major inducement. And where is our extreme order block? You can clearly see that this one here is the extreme order block. Like I said, this one is not a valid pullback, so I'm not interested in that. I will just be like, it's not there. So that's the bullish extreme of B, exactly right there. So I'm anticipating a sweep of this one, okay, or a mitigation of the extreme order block. Okay, so this here is the major inducement. So let's see what price does. Okay, so price extended further, breaking past this high. So now I need to see, or I need to check if this one here is a valid break of structure. And how can I see that, or how can I confirm that? Okay, so let's see. If I'm to take the fib and drag it all the way there, we can clearly see that the retracement has made it out to the 0.32. So that's the first confirmation that this can be a valid break of structure. And the ultimate one is seeing that this one here is a valid break of structure on the H4. So if this pattern here, or if this here, this break, I mean all of this is a valid pullback on the H4, then that will be a valid, a valid bullish break of structure. But we can clearly see that this one here is not a valid pullback. We can clearly see that that's not a valid pullback. So this means that this one here is not a valid break of structure. So back to the H4, back to the M15. This means that I'll be shifting the the inducement to the recently formed valid pullback, of which it is that on there. And yeah, everything is pretty much good. So now let's see what price does. Okay, so exactly right there, price is heading onto. Of course, this one is a weak one. This is a weak. A weak order block. So this reaction here is to be ignored. A weak order block. Just a weak order block there to lure the early buyers. So yeah, that's our swing point. You can clearly see that price has made it out to the major inducement, and let's see if price will. Okay, so price swept the major inducement, and you can clearly see what price is doing. So exactly right here, if I am to take the entry, probably upon seeing this bullish move, exactly right there, stop loss below here and targeting this high, of which it is the ultimate high, and that will give me a good risk to reward. Of course, a 1:2. I say that to me, a good risk to reward is 1:2 and above. So this one here, that's the trade upon the sweep of this. Upon the sweep of this major inducement, and price is extending that good. You can clearly see the buying momentum there. My entry is there, stop loss below here, but this is not the safest stop loss. The safest stop loss is of course here. But you can clearly see if I am to take that, you can see the risk to reward. It's very, you can see it's very small, even less than 1:1. So you can see that 0.6, that's unreasonable. So it will be reasonable for me to place the SL exactly right there so that I can get that 2.6, or just wait for price to fail this major inducement sweep and come all the way to mitigate this extreme order block. Yeah, that can be it, or just not take the trade. Yeah, so let's see what price does here. Okay, so price is extending onto our favor. Okay, right, price took us out, and you can clearly see right there. I'm now waiting for a mitigation of this one here. Yeah, nothing else, because you can see price took us out right there, and this one is our external high, and eventually our ultimate high. The higher time frame external liquidity exactly right there. So right here you can clearly see price is okay. Right, so price is heading higher. Right, exactly right there. Price made it out to the full TP without mitigating the extreme order block. Exactly right there. So guys, this is how the top down is done, exactly right there. And you can clearly see on this move, instead of actually taking a direct entry based on the H4, of which you'll get to a simple 1:3, just count how many trades you would have taken by just doing a top down analysis. This is the first trade, a 1:5. That's actually a 1:6. This here, a 1:2. Another 1:3. This one here will be a loser, but okay, there is this here, a 1:2. So imagine getting 4 wins and 1 loser. Of course, this loser will be engulfed by all these wins, and that will give you so much profit rather than just taking a direct entry based on the H4. By the way, this was a move that I anticipated and posted it on my free Telegram channel. Of course, I say that upon mitigation of this extreme of B, price will extend all the way towards this external liquidity. So this was a move that I anticipated and I posted it on the free Telegram channel as well as on my X. And there is a 9-month challenge of which I'll be doing this and making the breakdowns in the YouTube channel just like this one. So if you like such content, if you want to learn more about True SMC, consider joining the free Telegram channel as well as follow me on X and also subscribe to this channel if you have not yet. And yeah, so guys, if you have enjoyed the video, if you've enjoyed the breakdown, consider dropping a like and see you in the next video.